Have you ever wanted to buy residential real estate for investment purposes, but not sure if you qualify or even where to begin? Well, you may want to consider DSCR loans. DSCR loans don't require personal income or even a job to qualify. The purpose of these loans is to purchase investment properties only, using the rents from that property to qualify for the purchase. The monthly income from the property, as well as your down payment and a minimal credit score, is all that's needed to qualify. We don't factor in any management or maintenance fees, so really we just look at the mortgage, the taxes, the insurance, divide it into the monthly rent, and we get a percentage. As an investor, you want this to be high enough where you're making cash flow each month so you're not upside down, although for some people, they don't mind being short on the monthly payment because they may be buying a home in a highly desirable and appreciating area, so they're okay taking a loss monthly case because of the future appreciation of the home and possibly for other tax benefits. As an investor, you would like to have this ratio as high as possible, although for lending purposes, the higher the better and you'll get better terms on the mortgage. Typically, we'll see the income at 1.25 times the expenses, or if it's a 1-to-1 ratio, that's okay. And some lenders will go down to as low as 0.8, meaning the income is 80% of the expenses, so it's short. And we do have a program that doesn't look at that ratio at all. Although, as you can imagine, it's a higher risk for the investor, so the costs are higher, the rate's a little bit higher, and typically you'll need higher credit scores and or higher reserve requirements. Reserves are a few months worth of the monthly housing expenses for the property set aside that you retain in your possession after closing. This could be in checking, savings, or even retirement accounts. Some of our lenders will go with $2 million on these loan amounts, some will go higher, and the minimum down payment is typically around 20%. As far as credit scores, really 640 is the minimum I'm seeing for these programs, although the higher the better because you will get better terms on the mortgage. These loans are available at 30-year fixed, adjustable loans, as well as interest only. Interest-only loans are just that. You're only paying interest on the mortgage, so even though the rate could be a little bit higher, your payment tends to be a little bit lower. So if you're looking for cash flow purposes, then interest only may be the option for you. Lenders will lend single-family homes, condos, townhomes, and 2 to 4 units for residential, and we do have investors that will lend 5, 10, and more units for commercial purposes. But they all operate basically the same way, where they qualify on the rental income for the property. Speaking of rental income, there are some investors we work with who will qualify the property on short-term rental income. So if we can document that it has Airbnb potential through third-party services, we can use that income to help qualify. Typically, short-term rental income over the year will be higher than a long-term lease. This way, you can qualify for a more expensive property. These programs are available to first-time investors and even first-time homebuyers. It just has to make sense where the property is located. The only caveat is you most likely need to have some kind of prior housing expense. So you don't have to be a previous homeowner, but you do have to show that you've paid rent to a place for a while to show that you've had that kind of obligation. I've had this be a problem for people who maybe lived with family and wanted to buy a rental property, but they really had no history of making that kind of monthly commitment. These loans could be used to purchase a property, to refinance an existing mortgage, and to pull out cash on a property for whatever purpose you want, whether consolidating debt, investing in other properties, or upgrading the property you currently own. Some lenders will allow you to hold title in your personal name, although some will require, and it's probably in your best interest, to hold title in an LLC or some kind of corporation for asset protection purposes. And let's just get it out there. These loans come at a higher rate than you would see with a primary residence, and they do come at a higher cost. There's almost always points paid on these loans, and some of them do have prepayment penalties. Although it's possible to not have a prepayment penalty, you will see lower rates and lower costs if you have a year, 2, or sometimes 3 years early payoff. These DSCR loans are a great way to start investing in real estate. They don't require big down payments, they don't require you to make a lot or any money at all, and they have pretty flexible guidelines to qualify as far as credit score and property types are concerned. If you would like to have a conversation to see how you can start your real estate investing career, visit my calendar link in the description. We'll set up a time to talk and go over some different options. There's also links to other resources in the description to help you with your real estate journey. Thank you for watching and have yourself a great day.